Hi friends, Simit here from InformedTrades.com. In this video I want to talk about some basic risk management guidelines for investing in mining stocks. This is the next video in our series. If you haven't seen the other ones, you can check them out on InformedTrades.com. Key points, risk management is an extremely important part. I would personally regard it as the most important part of investing or trading of any kind. So 4 basic points for risk management in mining stocks. One is buy low, sell high. That's going to be obvious, but when your emotions get in the way, that can be easy to lose sight of. Buy in tranches, meaning buy in blocks or chunks at a time. Have cash ready for surprise sell-offs, an especially important point when dealing with small cap mining stocks. And if the price doubles, it's a good time to take half off, play with the house's money, so to speak. Again, that's a defensive move, which is really important. Risk management sort of is the name of the game. Buy low, sell high. As obvious as this point is, it does get a little bit harder when you're actually in the trade and caught in the midst of things. You'll tend to be most euphoric when the market's at a top, most inclined to buy, most happy with your position, and most depressed, most concerned, or most willing to sell, when the market's at the bottom, which is of course the opposite of the way it should be. Your emotions are often a contrary indicator, and using basic technical analysis can help you measure and see, okay, we're at a top, we're at a bottom, you can see what the situation for what it is. Buy low, sell high, really it can't be said enough. As obvious as it is, it's many traders, even experienced traders, will lose sight of that. Follow the indices. We're talking about mining stocks in this video, but they are for the most part going to follow the broader market. So when you see a sell-off, a broad sell-off, when you see the S&P 500, for instance, at support, it's having sold off, that's going to often be a great time to buy mining stocks. In fact, many mining stocks, especially the small cap ones that are more volatile, will sell off more sharply in a big sell-off. So when the market as a whole sells off, the mining stocks, the smaller ones, may sell off even more. That's really a great opportunity. Likewise, when the broad market, the S&P 500, for instance, looks like it's at a top, when it's been appreciating for a while and it's due for a pullback, that's likely to be a time when the mining stocks will also be a great time to sell. Well, they'll be overstretched to the top. So following the indices is useful, and as they're much more conducive to technical analysis, it can be especially helpful in that regard. Buy in tranches. The chart on the screen now sort of illustrates, markets don't move in a straight line. They'll often move in a trend going back and forth, but primarily in one direction over time. You want to have your cash ready for when there are dips. When the dip comes, when there's a sell-off, that's when you want to put a whole chunk of cash in. Again, some basic technical analysis, which we have a lot of on InformedTrades.com, can really help you in this regard. When a market pulls back to a trend line, when it shows like it's at support, that's a great time to buy. So saving your capital for those sell-offs is really the name of the game. Buying here, buying here, buying here. Of course, it's a lot easier to spot in hindsight, but if you're aware of that concept, it can really help you minimize your risk and prevent a situation where you're buying at the top. Be ready to buy in panic selling, especially in small cap market mining stocks. There's likely that, especially if you have a portfolio of these, that at one point one of these stocks is going to have a panic sell-off, whether it could be the market as a whole, which leads to a lot of panic selling, or one particular stock, for instance, if they revise their production estimates, if there's a change in management, it could be a myriad of factors. The thing is, you want to make sure you've done your due diligence on these stocks and that they're going to have your confidence when there is a sell-off to buy. Especially in a panic sell-off where you see the price really drop, volume spike. A great time to buy is when the sellers are selling irrationally, when they're not even thinking about it, they're just scared and they're selling. Those are really going to be the great buying opportunities, and so you want to have cash ready for those buying opportunities. Patience really goes hand in hand with risk management. If you're patient and ready for these opportunities, that's the safest way to play with a chance for the most upside as well. Take half off on the double. On the screen right now, you see a chart of Apple. Apple's gone from very low prices to over 600 now at the time this video is being made. The same concept applies with the Apple stock that will apply in mining stocks. Apple a few years back was at 200, 100. If it doubles, that's a great time to take half off, play with the house's money. That's about it. If you have any questions, you can join us over at InformedTrades.com.